Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are on Sunday, December 22nd. We're going to take a look at Lucid today. So I've been giving Lucid a lot of flack lately in my last few videos. You know, we're talking about it being pinned under this downtrend resistance, and then even if it breaks through that, it has this other downtrend resistance to deal with. And can it really get distance from these things, or just going to kind of piddle its way through and then get sucked back down into it? Well, it's looking like it wants to do the thing. So I'm going to get rid of this one. I'm going to keep this one in for now, though I would assume that that's going to get deleted sooner than later. And we're into this gap area, right? Filling this gap would bring us up to 326 if I put that in correctly. Yeah, 326 would be the gap fill on this. And, you know, Lucid is really trucking, putting in a almost 15% up day, even on the day where the market had the rough pullback and everything got sort of slashed a little bit. Came down a little bit over 8%, not like out of line from what was seen from stocks that have been pushing hard recently. So to me, that's not like of grave concern. And yeah, it's impressive what it's doing at the moment. So I thought we'd put a couple of additional levels on the chart, take a couple of extra looks at some EMAs, the Thinkorswim setup, and then call it a video. Do I like this level? Yeah, I like this level. 307 is a level that I'd keep an eye on. And then let's get another guy in there. Where do we want it? I mean, 321 is so close to that 326, so I'd maybe go down here, 318. So I know it's sort of a lot of levels in a little space, but the question when you get into these gaps is certainly like, can it get through? And if it can get through, you know, where do we start to look? I think this is, you know, 345, 346 is a good spot to start with. Maybe we'll just leave that one on the chart for now. We can always come in and fill in more if we need. There's plenty of price action to go off of, thankfully. But yeah, so as it gets through this gap, you know, I'd look for it to continue to hold support. I guess right now it would be resistance as it gets into Monday, but resistance flipping that to support at 307, 318, and then the gap fill at 326. If it can get through that and has some legs, still has some gas in the tank, 346 or so looks like a next good sticky point. If it does pull back into the gap, you know, that gap kickoff point of 290 would be an obvious place for it to want to hang on probably. I don't know if there's anything really in between that of substance. Probably nothing to worry about at the moment. We'll see how that sort of plays out. But those are the levels that I think are sort of most critical. Obviously, if it gets really dippy, we have these other levels. And like I said, if it gets legs above 346, we can always come in and put more levels in the chart. But for now, it's just going to sort of crowd things and whatnot. I say this often, but if I want just a nice, clean, clear look at the chart and don't have to worry about all the levels and stuff like that, I'm going to throw in these EMAs, and I'm just going to work off of these. Right now, what you see is the price action building off of the 8 EMA, right? This white short-term EMA. You see bullish crossover, fully bullish crossover of the 8 EMA for the short terms, and the 21, that peach-colored one, is about to cross over the red 34. Maybe it did a smidge on Friday, so as long as price stays, you know, competitively bullish, it should continue to drag that above. And then you'd have the short-term EMAs, the 8, 21, and 34, all in a bullish formation, trying to push it, trying to carry those candles over the ever-important 183 EMA. Now, if we scroll back and we look at this gray 183, you see it wrestled with it here, right? Never was able to hold it for very long. Put in a few candles, and then it got pinned below. Tried again, put in a few more candles, and then a few more candles, and then got pinned below, and then really shook it off. And now it's at a reattempt, and that's right where it wicked off of on Friday. You know, big valiant push from the 8 EMA, slightly through the 183, but then, you know, pulled back off of that, and that's where sellers started to unload some shares and, you know, wicked down from the 183. So that 183, to my mind, is the critical juncture. And even then, you know, we'll want to see what it does when it gets through it, because, you know, does it start to look really nice, but then do something like this and fall through? It wouldn't be the worst thing in the world if it came through and then came down and reconfirmed and then took off. But, slipping and then putting in a lower high and then slipping again, that's where it gets pretty dicey. Or same idea here. If it would have come down and reconfirmed here, that would have been one thing, but that's not what it did, right? It came and flipped it to resistance. So even if it gets through, that's what I'd be looking for. But for now, if these short-term EMAs can continue to gravitate toward a fully bullish formation, they're going to give it the best possibility of carrying candle after candle to and eventually through the 183 EMA. So that's kind of what I'm looking for at the moment. Volume-wise, we sort of take from just prior to this gap or so. Yeah, a bunch of shelves down here. It gets pretty thin in the gap, as you would imagine, stating something very obvious there. And then you get, like very small walls, but that's going to change as we sort of scroll back and sort of see where some of the walls develop as we bring in prior volume over time. And then on the order side of things, large orders continuing to come in through the week, which is quite interesting again because there was that day where sort of the macro forces came in pretty shaky. You do have almost 90% of total profited shares at close on Friday, so we'll see if those folks are apt to let their winners ride, and we'll deal with a little bit of shakiness if and when it presents itself, or if they want to start locking in profit, they get a little jumpy, what that does to the price. But pretty interesting that that's where all that volume came in, and there's very few holders at this point up in this range. But I guess ultimately not super surprising. On the Thinkorswim side of things, we have this trigger and fire that is now pushing this price action out of the channel. So maybe a good call out here by the TTM squeeze indicator on that trigger and fire. Phase oscillator down there at the bottom, situated at about 62 right now. So plenty of room left for it to run if it wants to based on that. And it is trying to get some action up over the call trigger at the moment. So if it can get over this call trigger for December, which is at 285, that gives it the potential for a +1 ATR all the way up to 502. So, you're talking about huge gains. So I don't know if it would make it that far. That seems like a lot. But even this initial ATR level is at about 391 or so. And then the January situation, right now looking like this. But these are dynamic, so these will shift. But it will be interesting to see if it can get action further, right? It's just started to poke through that call trigger. If it's able to really get some action through here, can it get to this initial level? There's not that many trading days left in December, so that's sort of the query that I have, which would push it toward 4, right? Get it really, really nice and close to 4. Again, this all the way up here, +1, plus being at 502, seems like a lot to me to get through in the next few days, but we'll see what happens. I mean, crazier things have happened, right? But it's not necessarily like a quantum computing stock or something at the moment. It is still Lucid. But just because it doesn't get to 502 in the next couple of weeks doesn't mean that it's like not going to be able to recover or offer some form of a comeback or something as we get into 2025. But it is doing more impressive things than I thought that it would, just to be honest. The last couple of videos I was really like, ooh, this isn't looking good. It keeps getting pinned under these various levels of downtrend resistance, and that's really hard for these stocks to recover from in any meaningful way. But it's trying to get this first gap fill in, and if it gets there, I didn't actually look to see if there's additional gaps. I mean, this gap way up here, that would get you almost to 10, but yeah, that would be, it's putting in some interesting work at the moment. But you have had swings before that have just completely died out, right? Like you had this big run here, and then that had a huge pullback, and then another big push, but then ultimately that got you down below 2, right? So that's where sort of, and in a relatively short period of time, I mean, that big run kicked off in like June, and then by November you were down under $2. So just keep in mind that yes, it's looking like it's doing the thing, but you know, we would have said that back up here and probably here as well. And so things can turn sour really quickly. And not to be a downer, I don't, you know, the hopium gets a little bit crazed at some point, and I get it. You want your thing to do well, but just be aware. You also want to live to fight another day, right? So, all right, folks. So I hope that you have or have had a nice weekend, and that you have a good trading week ahead. And as always, I appreciate you watching, and I will see you in the next video.